Corporate Transparency Act found unconstitutional. A federal district court in Alabama held that the Corporate Transparency Act, CTA, which requires the reporting of beneficial ownership information, or BOI, by businesses, is unconstitutional. No celebration yet. This is a lower court opinion that is sure to be appealed to the U.S. Court of Appeals for the 11th Circuit, which handles Alabama federal court appeals. Do not start celebrating yet. At this moment, most corporate taxpayers are still required to comply and could run afoul of fines of up to $10,000 if they do not. The district court granted the plaintiff's motion for summary judgment Friday in the case of National Small Business United versus Yellen. The court found that the government's arguments that Congress has the power to regulate millions of entities and their stakeholders the moment they obtain a formal corporate status from a state are not supported by precedent, and that the Corporate Transparency Act exceeds the Constitution's limits on the legislative branch. This is Dave Horwedel, EA and CEO of Torchlight Tax and Guard Dog Tax. What is the Corporate Transparency Act? This is the law passed by Congress as an anti-money laundering initiative in 2021, requiring reporting companies, defined as corporations, limited liability companies, LLCs, and similar entities, to disclose the identity and information about beneficial owners of the entities to the Treasury Department's Financial Crimes Enforcement Network, FinCEN. Reporting companies are required to provide information about both the companies and their beneficial owners and applicants, including full legal name, address, state or tribal jurisdiction of formation, IRS, taxpayer, identification number, birth date, and other details. Willful violations are punishable by a fine of $591 a day, up to $10,000, and 2 years in prison. A beneficial owner is an individual who either directly or indirectly, 1. exercises substantial control over the reporting company, or 2. owns or controls at least 25% of the reporting company's ownership interests. For new entities incorporated after Jan 1, 2024, reporting companies must also disclose the identity of applicants, defined as any individual who files an application to form a corporation, LLC, or other similar entity. These have 90 calendar days to file after receiving actual or public notice that their company's creation or registration is effective. Treasury's Financial Crimes Enforcement Network, FinCEN, which administers the Act, estimates that BOI reporting regulations apply to 32.6 million entities, with millions added annually. You can read the actual ruling by clicking the link below in the description. What happens next? An official from Treasury, which oversees FinCEN, said the agency would comply with the injunction and referred further questions to the Justice Department, which declined comment. Even after the 11th Circuit issues its appellate ruling, the case will probably be further appealed to the U.S. Supreme Court. However, because this decision does hold the Corporate Transparency Act, CTA, to be unconstitutional, it may cause FinCEN to delay enforcement pending further appeal. The bottom line was that the court held that the CTA was unconstitutional, and now the matter will go on to the 11th Circuit. Immediately after this opinion was filed, FinCEN put out a notice that this ruling only applies to the parties to the case. This means that the members of NSBU, National Small Business United, as of March 1st, 2024, need not report while everybody else must. For now, however, LLCs and other named entities that were formed prior to January 1st, 2024 are still under the deadline to make the CTA reporting by December 31st, 2024. Newly formed entities have 90 days from date of formation. That deadline now turns on what the 11th Circuit does, which will very probably be determined before this deadline. If the 11th Circuit similarly holds the CTA to be unconstitutional, then FinCEN will very likely have to suspend enforcement for everybody until and if the U.S. Supreme Court takes up the issue and hands down what would be the final opinion. Conversely, if the 11th Circuit reverses this ruling and upholds the constitutionality of the CTA, then the reporting requirement will probably be reinstated on everybody. including National Small Business United members, unless the U.S. Supreme Court either rules or imposes its own stay while it reaches a decision. The pragmatic course of action. Thus, pragmatically, what we get from all this is that if you have one of the 32.6 million entities that will be reporting, don't rush to file the report just yet, as FinCEN may suspend enforcement for everybody. There are reports that FinCEN is having trouble getting all its systems operational to handle the massive volume of expected reporting. FinCEN may use this ruling to its advantage to buy some time to get technical things in order. If you decide not to file now, and who wants to file an additional governmental form, be sure to check in on this well ahead of your filing date and do not risk incurring heavy penalties. Final thoughts? The world is changing. Whether for the better or for the worse is for you to decide. LLCs and other entities have been at the forefront of tax savings and asset protection strategies, but rules are changing. Taxes, litigation, and asset protection strategies change. The environment in which individuals, LLCs, corporations, and trusts operate can change. Torchlight Tax is offering a free consultation on tax saving and asset protection strategies. Living trusts can protect your heirs from probate. Businesses can purchase equipment or added marketing services that will lower their current taxes while building their future income. Proper uses of entities, LLCs, partnerships, S corporations, C corporations, and trusts can save tax dollars and protect your assets. Cost segregation and accelerated depreciation can save tax dollars now and help you build the value of real estate investments more rapidly. Qualified opportunity zones can increase your assets while helping disadvantaged areas and legally minimizing taxes. 1031 like-kind commercial real estate exchanges can defer profits on real estate sales indefinitely. An offer in compromise can eliminate tax debt that you cannot realistically pay. These are only a few of the many strategies available. Contact us for a free consultation at Torchlight or Guard Dog Tax at 1-877-758-7797 or email us at info@torchlighttax.com or info@guarddogtax.com. If you enjoyed this video, please like it, share it, and subscribe to our YouTube channel. Thanks for watching.